Hi everyone, Joe Carrig, Managing Broker of Coldwell Banker Real Estate in Danville, and this is your San Ramon Valley Real Estate Update for the week of July 6th. I hope you guys all had a great 4th of July weekend. I got a chance to, if you saw my video last week, to spend it up in Tahoe with some of my grandkids and a couple of my sons and their wives. So I had a great time. Hopefully you had the same. Let's dive right into the graphs this week because it's really telling where the market's going. If you've been listening to me now over the last 4 months, we talked about this real estate market in February was the most active February in 13 years. And all we really did, and I gave you graph after graph after graph, everyone thought that the sky was falling. And I was trying to show you the graph saying that this isn't 2008. This isn't a real estate recession. It was just a pause in the market, even more than I thought. So when we hit June 1st and things started to let loose a little bit, because we saw it growing and growing and growing, it was basically March 1st for us. So in the real estate business, we're just in the middle of a spring market. And as I mentioned before, all you have to do is show me the pendings and the actives and show me the trend, and I can tell you where the market is going. So let's dive right in and look at San Ramon. Well, this shows you, look at San Ramon. Remember last week Danville went nuts? Well, San Ramon went nuts. I mean, we went from 121 pendings to 144, which is basically 23 pendings, plus when you count the 7 closings, that's like 30 pendings. But look at the active properties. If you've been watching the last 6 weeks, the active properties have been keeping pace with the pending sales. But now it's a whole different story. You're basically seeing that the active properties now are getting eaten into, and anytime you have, a balance where there's that many more pending than there are active sales, there's 106 active sales and 144 current pending properties in San Ramon. And whenever you see that inverted, that's turning into a seller's market. And I check every day the hot sheets, and I can tell you that in San Ramon, there were, I think I looked today, in the last couple of days, there was like about, 6 or 7 closings. Every one of them was at asking price or above. So we're basically just continuing on the February trend. Now, how long will this last? Well, it's hard to say. Our strongest spring market lasts around 3 months because what happens is when we hit May and after the Easter break, the spring break, we see a lot of people putting their home on the market for the summer, and that kind of levels things out. Well, in 2 to 3 months, it's going to be October, and you're not going to see a lot of homes hit the market. And still nationwide, we have a huge undersupply of homes. So I think this is something that's going to keep the market strong, especially with interest rates being so low. And there's no sign that the interest rates are going to be going up because overall, the economy still has some recovering to do. But the real estate market, because of the interest rates and the lack of inventory, is staying very strong. So you see San Ramon, you'll see a very similar thing when you look at Danville. Look at Danville, 136 pendings. And again, not a whole lot more than last week, except there were 17 closings. So that means there were 19 additional homes that went pending in the last week. But look at the active properties, 99. And you can see, so now in Danville, 136 pendings, compared to 99. That's trending to be a seller's market. And again, almost everything's selling at asking price or maybe a little bit above asking price. That's what we saw going on in February. So look at BLACKHAWK. Now, BLACKHAWK, because of the price range and such forth like that, isn't as active as San Ramon and Danville, but still you can see that the pending sales are trending up and the actives are trending down. So even though that's a little bit more of an even market, when you look at these graphs, that's what we would consider somewhat of an even market, where there's about, twice as many homes on the market as there is pendings. That's somewhat of an even market, because there's always those homes on the market that won't sell or overprice or don't show well. So, but I would call this a steady and a strong market. And Alamo, the same type of thing. Again, the average price in Alamo is over $2 million. But that's why you see that there's still more active properties. But still, look at the trending on the pending properties. Look at it. I mean, there was 3 additional pendings with 4 closings. 7 properties went pending in Alamo at an average price of over $2 million. And you can see that still the active properties are staying fairly consistent, but that's a strong seller's market. But the good part of being a buyer, people ask, should I be a buyer in this market? Well, I'll tell you, it will definitely, I would be a buyer in this market with the interest rates hovering around 3%, but I'd be a smart buyer. You're going to pay full price. And if you're down looking at $1 million, you're going to pay more than asking price. But that's okay. When you look at 3% interest rates, that makes a big difference. You can pay a lot more compared to having a 4% interest rate. Now, interest rates overall, they're pretty stable right now. And I think that they'll stay fairly stable, as I mentioned before, because we still need the boost to the economy. Then, of course, we started following Dublin. And Dublin, you can see the same type of thing. Look at the pending properties. Went from 100 to 117. And with 17 closed properties, there were 34 properties that went pending in Dublin. But of course, the average price range in Dublin is under $1 million, so a lot more activity. But you can see right now, it's trending to be a strong seller's market. These are the type of numbers that we saw in February, which was the best February in 13 years. So the market is very hot, it's very active. I would still be a buyer out there, but I would be a smart buyer. Now, people ask, why is this happening, Joe? Well, if you look at our first look at the percentages, and it's very consistent. In the higher price ranges like BLACKHAWK and ALAMO, things are, never going to sell because there's only a few closings. If a $2 million home sold for 1.9, it's going to whack things out a little bit. But when you look at San Ramon, DANVILLE, DUBLIN, basically things are selling for 100% of asking. And the lower price ranges are actually selling for more. If you have a client or if you're looking for a home around $1 million or under, you're probably going to get in the bidding war. You just basically plan on it. So, but why is this happening? Well, look at the Housing Affordability Index. And this is nationwide, of course, put out by the National Association of Realtors. So if you look at, the red was during the housing crisis. And obviously prices dropped so low that the affordability was much better. And then obviously it went down and down and down. So the higher the index, the more affordable median price homes become compared to the median incomes. So as you can see today, it's basically strong. And the reason why is it's all about the interest rates. So look at the next graph, and this is, you see the pending sales. They were basically, the 100 equals historically healthy level, and you see they were high, 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 high. Then obviously in February and March, they dropped way down, but look at what's going on now through May and June, and you're going to continue to see that graph go up. But this is really what it's all about, the housing supply. Back in June, the housing supply was fairly even, and it went low, low, low. And you can see in April it went to 19.7% because a lot of people weren't putting their homes on the market. But you can see in May, even with all the new inventory going on the market, it was still minus 18.8%. So basically, that's why you have, the market where it is as far as it all comes down to the low interest rates and the lack of inventory. And nationwide, we're 1 million to 2 million homes less than what we really need. And in California, especially in the Bay Area, the restrictions are so tough, to build homes that now it's easing up a little bit, but for the most part, it's easing up if it's low or moderate income, because they have obviously a smoother way to go in. They can bypass a lot of the regulations if there's 42%, low or moderate income. That's why when you are seeing some development, like you're seeing some apartments built in Danville, those got built 3 stories high, which 3 stories is not even allowed in Danville, but they were able to bypass the local ordinance because at least 42% were low or moderate income. So anyway, if you have any questions at all, first off, let me say, people were asking me, so what do you think how the election is going to affect it? Well, if our normal spring market is 3 to 4 months, it should be ending about October, November. There's no doubt that this will probably be one of the ugliest elections there is, which means there's going to be a ton of negative news out there. And there's no doubt, and I never get political in these, but there's definitely, it's funny when I hear someone basically say, well, I'm undecided. Well, when Clinton was running against the elder Bush and one was a little bit lean right and one a little bit lean left, I could see people being undecided, but unfortunately the country's like this and the political parties are so far apart. I just can't imagine anybody being undecided because one is so far left and one is right. So you have a situation where, and unfortunately that's a huge gap. As we get closer to the election, I'll talk a little bit more about how I think the election, based on the past, is going to affect our real estate market, because that's what I'm here to do. Right now, I can tell you, if you're a seller, great time to be a seller. Prices have never been higher. They are much higher than they were at the peak in 2005 and 2006. So we've not only made up that lost ground, we've gone above it, just like the stock market. But every neighborhood's a little bit different. Your house is different even than maybe the one next to you. If I can help you in any way or even just answer questions, that's what I'm here for. Again, my number, 925-487-6838. Again, 925-487-6838. Or joe.kerrig, joe.kehrig at cbrealty.com. And again, I'm the managing broker of the Danville office. Please call me or reach out if I can help you in any way. Thanks. Have a great week, and we'll see how the numbers look next week. I think it's going to be a lot more of the same.